Information provided by Wall Street Petting Zoo is for educational purposes only and not intended to be financial advice. Please consult with a licensed financial advisor before making any financial decisions.
Hello, my friends, and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we review the week's market news and look ahead to the coming week. I'm Christopher Smith, and unfortunately this week Robert, my co-host, is having some web connectivity issues. The internet has been down in his town all day, so I'm going to be flying solo on today's episode. It's going to be a short one. Overall, it was a very bullish week for stocks. The Nasdaq was down about 1.25%, but the S&P 500 gained over 2%, and the Russell 2000 small cap index gained an insane 6%. International markets have also been having an incredible run, with emerging markets up more than 8%, and European stocks are up more than 14% in the last 2 weeks. International stocks are benefiting from a new round of economic stimulus and also from the continued weakness of the US dollar compared to the euro. Value stocks this week surged and growth technology stocks fell on news of Joe Biden's victory in the presidential race and Pfizer's positive clinical trial result for its COVID-19 vaccine. On Monday this week, the ratio of value stock prices to growth stock prices saw its largest single-day percent gain on record in history. The highest priority patients could begin receiving a vaccine as early as December, and widespread vaccination would allow economic activity to resume, which would be great for value companies like airlines, cruise lines, gyms, retail stores, and other businesses that are currently trading at a discount because they were hard hit by the pandemic. Meanwhile, growth technology companies that have been trading at a premium because they benefited from the pandemic, such as Zoom, will be hurt by widespread vaccination and the end of work from home. That's the main reason that investors rotated from growth stocks to value stocks this week. And also, Joe Biden is widely expected to crack down on big monopolistic technology firms, and his corporate tax hike is also expected to disproportionately impact technology stocks. Now, Biden will likely be governing with a divided government, so whether he can actually get any of that done is an open question. But these political risks are another driver behind the rotation out of growth and into value. However, a new round of lockdowns was announced Friday in the states of New Mexico, Oregon, Vermont, Virginia, and West Virginia. Renewed lockdowns are also under discussion in some other states, including Michigan. A lot of states are resisting, so it's unclear whether these states that have announced new lockdowns are just outliers, acting on their own, or whether they are a canary in the coal mine portending a national movement toward renewed lockdowns. I expect that Friday's lockdowns, regardless, will cause a bloody stock market day on Monday and at least a temporary reversal of the value growth rotation. I think we'll probably see an overall red week this week. We might see some upward movement in grocery stocks and technology stocks that will benefit from the pandemic. And I definitely think we'll see some downward movement in travel and traditional retail stocks. This round of lockdowns should be relatively short. I live in New Mexico, and here the governor is planning on a 2-week lockdown, and other states are also trying to keep their lockdowns limited in scope because the economies of these states really cannot bear a prolonged lockdown, at least not without renewed economic stimulus. So, if value stocks and small caps do pull back in the next week, I think that will be a temporary thing. What we're doing here is we're hitting pause on the value growth rotation. I don't think that it's going to be a long-term reversal of the value growth rotation. So you could look at the next couple weeks here as an opportunity to get into the value growth rotation trade at a discount if you missed it previously. Now, having said that, we've got some major headwinds out there in the market right now. Here are a couple more big warning signs. The Citigroup Economic Surprise Index has been at an elevated level since the pandemic started, meaning economic data has been surpassing everyone's expectations. Well, in the last month or two, it has been crashing back down toward normal levels. I'm not sure if that's because we've just raised our expectations or if it's because the economic data have weakened quite a bit in the last couple months, but either way, it seems like positive economic outcomes are now priced in. Also, insider selling, which is the sale of a company's stock by its own executives, has soared through the roof to extreme levels in November. Insiders usually have a pretty good bead on how a company is doing and how the overall business environment for the company looks. So the fact that they are stampeding to sell their shares is a pretty big red flag for this market right now. Well, that's all for today's show. Wall Street Petting Zoo is available through YouTube, Podbean, Stitcher, or iTunes. We would love if you would subscribe and give us a 5-star review. You can also find us on Facebook and Twitter, where I post throughout the week. We don't do any advertising for the show, so word of mouth is the only way we get the word out. And if you heard anything on the podcast this week that was useful to you, we would love if you would give us a like or share on your favorite social media platform. We really appreciate your support. You can also support the podcast financially by clicking the referral link to Webull under our YouTube video and opening a Webull brokerage account. If you deposit $100 into your Webull brokerage account using our referral link, not only will you get some free stocks, but we also will get some free stocks, and that helps support the podcast. Webull's great community and powerful analytics tools make it our trading platform of choice. Thanks so much for listening, and we will see you back at the zoo next week.